Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we are going to be delivering another daily cryptocurrency market update. If you are finding yourself on this channel for the first time today, do consider becoming a subscriber because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that is exactly what we are going to be doing in this video. Yesterday was the first day in the United States of a Bitcoin spot ETF being traded, and we are going to be looking at the revelations that have came out of yesterday to start the video off. We have a hell of a lot to go through, guys. We're going to be looking at the volume that the spot ETFs saw. We're going to be breaking that down a little bit because ultimately, I think quite a large part of the volume that we saw was the conversion from GBTC into their ETF product. So a lot of volume was already there, and it was just a conversion that perhaps inflated things. But I still think it's positive all around. And there's been some banks, there's been some institutions like Fidelity and Merrill Lynch, which is owned by Bank of America, that have actually came out and banned their users from buying the Bitcoin spot ETFs. Also, we've got revelations from JPMorgan warning about volatility in the crypto space that could have been caused by all this. Senator Warren pushing back. Lots to cover. And that's not it, unfortunately, guys. Then we're going to be diving into the macro world. Yesterday, we saw the CPI print for the United States, which came out at 3.4. The previous one was 3.1. And we have spoken about this kind of macro headwind at a time when Bitcoin is running into resistance, which is perfect. We want Bitcoin to sell off here almost, which sounds absurd, but that's going to set us up for broader continuation. But lots of resistance in the stock market, lots of macro news coming out. Of course, war breaking out. Lots of things going on. Not to trivialize or understate what's taking place on the kind of war front. It's not good. But you guys know that I ultimately believe that we get lied to a hell of a lot about a hell of a lot of things, and it leaves us in this really interesting place. But that is for potentially another video that perhaps wouldn't be featured on this channel. And then we're just going to be looking at the macro situation as a whole, and then diving into Bitcoin, of course, where the price is at and what we see moving forwards. So to start the video off, guys, I would like to just go over to my website and thank each and every one of you for trialing out our new portfolio tracker. So if you guys navigate yourselves to the top right, you will find portfolio, and you guys 100% free, 100% transparently, 100% securely can essentially set up a portfolio tracker that you can use to track all your cryptocurrencies across whatever platform it may be. So please do go and try that out, and a huge thank you to each and every one of you that has been trialing it out. Let's start things off. So spot Bitcoin ETF volume eclipses $4.5 billion in the first day of trading. Now, this is huge. I think this actually broke a record for ETF trading, which on the first day anyway, which is pretty huge, and it shows the kind of demand. But a large part of this was indeed Grayscale. So let's dive over and take a look at the actual inflows into the individual ETFs. Of course, you've got Grayscale, which leads at $2.6 billion. And then, of course, BlackRock's IBIT at $1 billion, Fidelity at $685 million. And then it gets smaller and smaller as you go down the list. So BlackRock's obviously very popular. Grayscale's extremely popular. But the thing with Grayscale that's very interesting is, and let me just come back to myself to sort of shed a bit of light on this. Grayscale already had GBTC, which was their exchange traded product. It was a trust, essentially, that wasn't pegged to the price. And we arbitraged Grayscale's premium or discount, I should say, and did very well of it. You've got an Ethereum discount and other discounts that we can maybe talk about in another video. But ultimately, a large part of the volume you saw with Grayscale was them just converting the capital from their trust into the ETF. And that's why their figures are perhaps larger than BlackRock's and very, very inflated. Eric Balchunas, I'm saying that 100% wrong, is the senior ETF analyst over at Bloomberg. Of course, he was very vocal on the whole thing. All told, there were 700,000 individual trades today in and out of 11 spot ETFs. For context, this is double the number of trades for the QQQ, which is the NASDAQ, although it sees much bigger volume because bigger fish use it, of course. Crypto is still in its nascency, still in its infancy, and this is just the first kind of day of trading. So a lot more grassroots action versus big seed buys than I expected, which is good. So overall, I think it's good. Again, Grayscale leading. He also comments that, just looking at the sort of volume, so on and so forth. On the back end of this, a little bit of pushback to the whole thing is Bank of America owned Merrill Lynch joins Vanguard. It was Vanguard, sorry, not Fidelity, who are obviously offering a Bitcoin spot ETF that came out and denied customers access to spot Bitcoin ETFs. So you're going to see this. There was a very interesting article talking about actually the irony of them banning this whilst having stocks on there that have links to human rights violations and stuff like that. But this is the contradictory and sort of spiritual world that we live in, unfortunately, guys. And you are going to get this, of course, and I wouldn't quite call for people to close their accounts, just perhaps set up another one. And if you do want exposure to Bitcoin, go via those different routes. The fact that BlackRock is allowing it and facilitating it, I think is more than enough. JPMorgan interface throwing this warning when you try to buy BlackRock's IBIT Bitcoin ETF. We get it. JPMorgan, the boss, hates Bitcoin for political reasons, but you are also named as an authorized participants in BlackRock's offerings. So just accept your fate already. It's such a polarizing thing, crypto, that people, they have a black and white approach. There's gray always. JPMorgan is spot on with this, by the way, in terms of saying that volatility is like, let's look at the warning. The warning reads, and we've got the whole thing on the screen, thank goodness. Cryptocurrency linked instruments present unique risks and may experience high volatility. For more information, see JPMorgan. That's a fair warning for them to give. There's no reason to hate on JPMorgan for giving this warning. Yes, they're facilitating. Yes, they're enabling it. But it's true. And actually, the sad thing for me, and we're going to do a longer video on BlackRock's overall negative sort of what would be the right word here? Negative repercussions of them being involved in crypto at a later date. But the worrying thing for me is when derivatives start to get involved and when they start to use that to manipulate the price, which they ultimately will, both in their favor and against ours. So very interesting. Also, you had Senator Warren. The SEC is wrong on the law and wrong on policy with respect to the Bitcoin ETF decisions. If the SEC is going to let crypto burrow even deeper into our financial system, then it's more urgent than ever that crypto follows basic anti-money laundering rules. Wow. I mean, this is just hilarious. To say the SEC is wrong, who are you to say that? But she's on her own fight, funded by her special interests that back her and put her in the position that she's in. Please do go and look at how US politics works. It's basically who can raise the most amount of money, so on and so forth. Let's talk about the macro. So lots of things happening internally with crypto, but we've still got to contend with the macro picture. We've still got to contend with the sort of technical picture, which all leads us to have a bullish outlook. But there's a bit of a kind of store box. You've got lots of resistance coming into play on the charts, and you've also got fears, perhaps, in regards to the macro context. And I have always said this. I think pricing rates in March as being cut out is way too premature. We've seen in the United States, we've seen in Europe, the UK and Europe, we've seen a debate and lowering of rate cut expectations, likely going to follow for the US. Markets did very well on the back end of the year, pricing in rates as early as they did. There's now a bit of a readjustment, and it's causing a stall box at a key level of resistance for most markets. Of course, yesterday we had the CPI print, which we are now going to go over to, which came out at 3.4. The previous one was 3.1. This isn't shocking. It shows a bit of a stagnation in deflation. However, it's still in the right direction. If we started to get above 4 and something like that, then I think the macro picture would really need perhaps readjusting. You're also getting oil prices jump 4% after US, Britain strike Iran-backed Houthis. I don't even want to go down this route, to be honest, and start to give my opinions on this stuff, because this is a crypto-based channel, not a geopolitical one, but this is stuff all to watch. Adds to this sort of uncertainty, perhaps, in the macro store box. You had Fed Minister Mester. March is too early for me for a rate cut. I think we need to see more evidence. And I agree with him. I think it's too premature to be calling rate cuts as early as March. So a really very interesting sort of situation. Store box on the macro, which is actually perfect for us, because if you guys remember, we were essentially looking at the potential for a Bitcoin inverse head and shoulders, just like we had an inverse head and shoulders here that we called 42K from, and it made its target. And if you look at where it consolidated, we're now actually wanting Bitcoin to form a right shoulder here. So it could be a very short-lived right shoulder. But this is what we want, because this is going to give us broader projection and give us a target for Bitcoin, just like we had at the start of the year. Right now, we don't really have a target to where Bitcoin could get to, but certainly if it does form this right shoulder and actually break out, this is the kind of price that we're looking at, which also aligns with our kind of macro thesis on everything. So we want Bitcoin to stall here. And the interesting thing for us is, if we look at others' dominance, which is essentially altcoin dominance outside of the top 10, this has played out beautifully. Smaller head and shoulders, made the broader head and shoulders, breakout, come back, retest, perfectly bounced on an area of support. And now you're seeing, so altcoins, what this is suggesting is actually during this period of Bitcoin forming this right shoulder, altcoins are going to do well. And if you look at, there's a kind of fundamental narrative behind that, which is now a Bitcoin spot ETF has been approved. All eyes on Ethereum ETFs, which is likely to start coming into decisions in August. And then you'll have basket of altcoin ETFs, so on and so forth. And we might do a longer video on that later on today. So all is good in the hood, essentially. It's just we're entering a bit of a stall box. Let's show you some other markets to show where they're at and the kind of stall box that we're talking about. Of course, you've got the S&P at all-time high resistance. And this was something we were long on, along with the NASDAQ. Beautiful trades for us. Microsoft was our kind of golden child. You're kind of in a bit of a stall box that I think you will press through. We're bullish across the board. We're just appreciating the fact that resistance is coming into play. There's a fundamental sort of macro change, perhaps. Gold looking to sort of pick its head up. I think gold's in a major cup and handle, so a kind of head and shoulders. We've got gold at 3K coming soon, and ultimately we've got the dollar continuing to go down. Dollar's seen a bit of strength. We have said we didn't want it to go over the 104 mark. It hasn't. It's capitulating here, and we think it's in a broader channel to the downside. So that is a lot that we have covered. And on that note, I'm going to love and leave you. If you haven't checked out our portfolio tracker already, please do consider it. It's totally free, totally transparent. We don't use or sell your data. And also consider becoming a Patreon, because we are basically forming what we believe is a fortified portfolio to really maximize the sort of potential of 2024. And actually, if you look at how well we did last year in our portfolio, it was a very good year, I think, for all of us. And certainly towards the end of the year, when I had one-to-ones with people, the overwhelming majority was and had done very well in the year of 2023, which was a very volatile year for most. But, we came out victorious. So that's all I've really got for you in this video, guys. If you enjoyed the content, like us, appreciate it, so as a comment. And I will catch each and every one of you, hopefully, in the next YouTube video. See you in the next one.